All right, everybody, welcome to Covered Call ETF Investing, your central hub for deep Covered Call ETF data. And I'm joined with your number one source for your income investing needs, the GOAT, the streamliner no more, Adriano. How's it going, Adriano?
Good, Jordan. It's good to be back with you, my friend. Always fun discussing, the funds we invest in. Obviously, people know we have very, very similar styles. We invest in a lot of the same stuff. We think a lot alike, I'm sure. So always fun to catch up.
Yeah, absolutely. And for those who don't know, this is the second, basically year in review, look to the new year, what kinds of funds, what kind of speculation might be out there, things that stood out to us in 2024. So the fun thing about this being the second one is I have a list of our predictions that we made from 2023 heading into 2024. So
Right.
we'll probably just start off with that and see exactly what we predicted, what came true, what didn't came true, what we missed, and we can kind of go from there. So, if we want to hit that, I'll hit it right away, unless you got something else you want to just talk about before we do that.
No, I just want to apologize in advance if I talk over you. There's a bit of a lag, probably my fault, but we're in Panama here, so it's a bit unstable. But if I do, I don't mean to do it. So
All right.
it's happened before with other guests, so I just want to throw it out there that I'm not trying to interrupt or anything like that. It's just sometimes there's a delay. There's a
Yeah,
delay.
no problem. I don't offend easy, so especially over laggy internet connections. All right.
Awesome.
So, the fun part of the year in review is talking about the predictions we made from 2023 into 2024. So, one thing we talked about last year, which was on my 34th birthday, and I'm just about to turn 35, so almost a year to the date that we last did this.
Mm-hmm.
Um, we had talked about the maturity of cover call ETFs in Canada, a ton of launches in 2023.
Right.
There was roughly about 23 launches that year, give or take. And we had talked about a slowdown in launches. Well, we were completely wrong about that. There was roughly about 40 launches in Canada this year. So that was
It's
one.
incredible.
It's you know what? That's it's great news. I'm happy that we got that one wrong. That nothing slowed down. If anything, more popularity from these funds.
Yeah, more demand. Yeah.
Exactly, more demand for it, and also once again more maturing in this space. People are much more open to it. I think even in on the various social networks, I think people are coming much more around to this being a much more legitimate strategy to take on,
Yeah.
even in a small proportion from those who maybe aren't used to, um, who maybe don't want to take this on full stride.
Yeah, for sure. You're talking about Canada specifically,
I'm
right? On
talking
the
about
TSX,
Canada
right? Okay.
specifically and the fund launches
Okay.
from
Yeah.
Canada.
Yeah, I actually just spoke with Raj, the CEO of Evolve, and he did tell me I have a Q&A coming up with him, and he did tell me it was a record-breaking year. The US side, insane. I mean, just launch after launch after launch. I mean, they're all competing with each other as well. So you got a million S&P 500 ones now, Nasdaq, Russell 2000, all kinds of different flavors. But I'm assuming for the video, for today's conversation, we're going to be sticking with Canada, right?
We'll
So
stick with Canada. We will talk about the US side of things, but at least
sure.
the prediction part and most of this will, again, yeah, stick with
So first one, we're wrong. So far, one oh zero oh
basically
and one.
exactly 0 pro. But we rebound with the next prediction, which had to do with emerging markets and developed markets cover call ETFs. So
Uh-huh.
we were talking about last year we were talking about EQCL and how come there was a portion of that fund that didn't have a developed markets or an emerging markets cover call ETF. Well, halfway through July, Global X comes out with one and they stick it inside EQCL, which was great. I was looking for that sort of that linchpin to get into EQCL myself. I think the last thing that we're just missing on the EQCL side of things, and it pops up in my comment section when I mention it, is a distribution increase just from replacing those total return funds that were inside EQCL that weren't cover
Didn't
call.
they? Yeah, yeah, I know exactly what you're talking about. I think they did increase it.
They
Didn't?
increased it before they added those funds.
Ah,
So
okay, 19 and a half cents to 21 cents in that happened in the April
right.
distribution. Yeah.
But though, so I think a lot of us were kind of expecting, some, I mean, when you're replacing 40% of a fund, and throwing that extra cover call coverage in there, I think. So anyway, many investors are still kind of maybe holding their breath and waiting for that. So maybe there's something else behind the scenes. Maybe it is what it is. But either way, I'm happy to own EQCL even without that distribution raise. It's a cherry on top of the cake if it happens.
Yeah, and they added the Russell one too.
That's right.
Global X pretty much completed the lineup. So they have all the major indexes now. They're all in EQCL. They just launched the Russell 2001. I think the only one that's missing now is the leveraged one, the leveraged version, which I would hope I'm assuming they'll come out with it, but I think once that one is out, the whole index lineup has been covered by Global X. I have to admit, they did a good job in seizing the opportunity, seizing the demand, and I believe a lot of the launches were from them this year, right? So.
That's right. Yes. Yeah, I mean, yeah, like you said, they've done a good job just to kind of wrap up and put the last little bit of the last few indexes to
Yeah.
really complete EQCL. And because for the most part, I think a lot of the other fund managers hand pick their stocks
Yeah, most of them, yeah.
and put them into funds that are, S&P 500 like or NASDAQ 100 like, but not
Yeah.
necessarily mirroring the quantity in the index.
Yeah, everyone's got their style, a lot to choose from. I personally am starting as the year went on, and as what I've noticed, I'm liking more and more the index style of investing. The more I think about it, the more I realize indexes are perfect. I
Yeah,
mean, think about it. They automatically rebalance in the best stocks.
yeah.
So they're very popular, obviously. I think it's just one of the perfect ways of investing. I mean, it's a classic way to invest in the growth style. Why wouldn't it be the same thing on the income style? So I've added a lot to
All right, so we're 1-1. The last prediction we had made, I would say this was more of a me prediction. I was expecting more niche cover call ETFs. So one thing I had talked about last year was maybe floating the idea of something like, putting a cover call on like uranium, like a uranium ETF. So, or maybe something like copper, just something that is more industry based than it is, say, sector based. Like you're really niching down under the sector to capture something there. That really never happened. I mean, I used the travel one
yeah
by
my
Harvest as a good example of that. That travel one is actually quite popular. And it's more kind of niche in nature because it isn't just an
yeah.
industry. So, um,
Yeah, you have to think also that you also have to think about that the the niche stuff doesn't have big options. They don't have big options markets on those. So they're harder to write options on. They're harder to launch. So I think that's probably why even in the US there's not many niche ones. So
um,
it would be hard to do one on uranium, and the more niche it is, the smaller the options market is, I believe. So it would be harder for them to write options. I think that's probably the reason. Also, demand, right? If the demand is not there, I don't think they'll do it. So look at the gold one, for example, that Global X has, right? They have HGY, which is actually like gold, like physical gold. I don't think it has that much demand because gold is not volatile. I don't think there's that big of an options market. You can't get that much premium on it. So I'm assuming that it's even more so on more niche stuff like uranium. That's just my guess anyway.
You know what? It's a fair point. I mean, obviously everything is around demand. Are people asking for it? Do investors want it? And if no one's asking for it, then I mean, you're not going to get it. So I was expecting maybe there, it didn't even have to be uranium. It could have just been honestly anything. I thought we'd see maybe something a little unexpected in that way. But again, it's not there. And the money is with the indexes or the various sectors even you could say, but the big money is with
Yeah.
the indexes. So no surprise there. So those were our three sort of predictions that we thought going into 2024, and we'll make our predictions about 2025 maybe towards the end of this video. But was there anything besides that that kind of really stood out to you this year, Adriano? Whether it be from fund launches, maybe distribution increases, maybe the performance of your own portfolios, anything maybe personally or even outside your portfolio that maybe stands out to you in 2024.
Well, the biggest surprise, I made a video about this, was that I made a video saying covered call ETFs will never beat the underlying. And I was wrong because there's funds that are covered call ETFs that are actually beating the S&P 500, that are beating the Nasdaq 100, or very very beating it very very slightly, or at least on par with that. So for example, I think I checked like a night or two ago, USCL from Global X, for example, that's their S&P 500. Yes, there's 25% leverage. It's beating VFV, right? Everyone knows what VFV is. Everyone invests in VFV. It's the cornerstone of their portfolio, while a covered call ETF is beating VFV. You have
Right.
QQCL, which is beating QQC or ZNQ. So these are covered call ETFs that are beating the indexes. And of course, that 25% leverage helps. But what's even more impressive to me is that this is in a super strong bull market. We know they're going to beat them in a flatter down market,
Yeah.
right? But in a super bull market, they're actually staying there, and some of them are slightly outperforming. There's even some on the US side that are no leverage and they're outperforming the indexes. I never thought it would be possible, and it just makes me laugh so much because people typically say, oh, you're just going to get lower performance by putting a covered call on it. Well, it's not true anymore. So that was to me like the biggest surprise, pleasant surprise for sure, for sure, for sure.
Yeah.
And it's no, even HYLD from Hamilton. I mean, once they made their changes, brought everything in house, they also are beating VSP. They're beating the S&P 500. So it's not just one, it's not just two. There's a handful of them now that are beating them, or at least performing very very similar to the underlying, right? Whether it's an index or etc. So I think that was the biggest surprise for me this year. Pleasant surprise.
Yeah, I would totally agree just on the performance side of things. What 2024 proved is just that is, you know what? If you are someone like I tend to say ad nauseum on my channel, is if you're someone who really wants, if it's important to match, what's maximum growth with maximum yield? Like, what is that balance? Where is that at? On diversified funds. That's just what I was kind of trying to experiment with, which meant like a lot of different funds and holding a bunch of different funds and experimenting with those strategies.
Yeah,
And I think what, to my surprise, and again, it's not like I'm not trying to shoot for the market. That's not why I'm in cover call ETFs. I'm here for these things to, enhance my quality of life. I'm working towards that. But here we are. I think, my portfolio total return wise this year so far here, we've almost ended the year and it's up like 32% on, 28%, whatever the NASDAQ is currently.
yeah,
It's so to me, I mean, a big reason for that on my end of things is HYLD is a massive reason why. And I mean, we can certainly kind of like quickly flesh that out. But again, Hamilton, they stock pick. So, you're not getting, even though it kind of mirrors, it looks like the S&P 500, you're getting a concentrated mix of the
Yeah.
sectors that make up the S&P 500, while it only being like 20 companies from, say, SMAX, or 20 companies from QMAX, whatever it is, 20, 25. But that concentration has really propelled that outperformance in that way. And obviously the consolidation of HYLD too,
Oh, that
they
was huge. That was huge, right? Bringing everything in-house, putting a 0% management fee. The fantastic management, of course, they got Nick Picard, who's obviously a superstar.
yeah.
And yeah, HYLD is basically a concentrated version of the S&P 500, very, very close to it. If you just do a comparison with VSP,
Yes.
and I say VSP instead of VFV because it's hedged Canadian dollar. They also have HYLD.U, and that one you would compare to VFV because it's not. But they're doing phenomenal. So I actually did an interview, like a 1 hour interview with Nick, and I asked him that very question. Why not just do the S&P 500 and write index calls, right?
Hmm.
In the SPX calls. Well, their formula is they do at the money calls, and they pick and choose stocks with deep, deep options market. So they basically constructed the funds designed for covered call writing. So that's why it's a bit unique. It's a bit special. But yeah, HYLD obviously a big one of my three musketeers, I call them, right? I got three musketeers. I got HYLD, USCL, and QQCL. Those are my three musketeers. I love them. S&P, and NASDAQ,
Yeah.
right? To me, that's what they are. They're the cornerstone of my portfolio. Of course, the US market has been on an absolute tear, especially lately with Trump's win. And who knows what's going to happen in the next 4 years, right? So it's pretty interesting. It's good news for sure.
It sure has been. And yeah, you know what? One thing I must say, for if people haven't seen that interview that you had with Nick Picard, I would say too, the other highlight, that when I remember watching that interview, the one little nugget that Nick had brought up was the fact that when they stock select,
Yeah.
they can get higher premiums from just the individual stock selection. So
Yes.
it's a double whammy there. They get a higher yield, and it's concentrated for better overall performance. So I mean, I think that's the secret sauce right there, at least in Hamilton's case.
Yeah, they know what they're doing, right? I love doing those in-depth interviews.
Mhm.
I still find it weird that I don't know, maybe it's because they're long, but they don't get as many views as, for example, me talking about something where you got the guy actually managing it, right?
Yeah.
Like you're supposed to listen to them. But I love talking to those guys. I mean, they really work hard to try to figure out the best strategy, and they're all trying to beat each other, right? Global X versus Hamilton versus Harvest versus Evolve. They're all in a healthy competition. They're all in the same area in Toronto.
Yeah.
It's just great. Competition is just awesome, right? It makes everyone try to one up each other. It's a good thing. So it's good for us, the consumer, right? That are having more choices now with whichever one we feel we get the best vibe with as well. I did another Q&A with the guys at Global X as well. 1 hour, go in depth about their cover call strategy. So yeah, it's very interesting to listen to these guys who are, really working hard to beat each other, right? So it's fun.
Yeah, the for sure. Beyond performance with HYLD, I would say another real nice surprise from this year on the American side is like SPY Eye and QQQI. Their AUMs are just exploding right now. People are just
Very
flocking.
popular.
Yeah,
Yeah, the guys at Neos. Yeah, I just talked to them actually. I did a couple of interviews with them. They launched a Bitcoin ETF. They bought back their new C, which is QQQY's a different version of a Nasdaq 100. So yeah, they're doing a good job too. They're doing a good job too. They know what they're doing with These are options experts,
yeah,
right? These are people that live and breathe options. So they know what they're doing, right?
that's
It's people like them a lot because The special thing about them is that it's a very, very consistent monthly distribution. It's almost the same every single month. So people like that, right? People who live off of it, they want a consistent monthly paycheck. They're obviously doing a good job, right? So yeah,
Yeah, and it's great. I mean, those distributions come out in a they come out in a fairly narrow band. Like you're not getting
yeah,
much variance from those distributions. One of
exactly.
the more consistent ones out there on the American side. Yeah, I kind of do wonder how come we don't see, even if it's just kind of that artificial one number every single month. I think funds like Maxi and SVol are maybe the only funds on the American side I can think of that have been like the same number every single month. Unless they're raising it, but not kind of back forth raise, drop, up, down.
Yeah, if they SVol has varied slightly. I think it went from like 32 to 30 to 28, now to
Um,
27, but it's 100% normal. If you understand the fund, you'll know why,
right, of
right?
course.
Rates went down and they held mostly short-term bonds, so of course it's going to go down. But they're always switching it up as well. Now they actually hold a lot of the S&P 500 itself, if you've seen,
Mhm.
and they write pull, put, and call options and spreads. So yeah, I
Right.
mean, there's plenty of choices on the US side. There's a lot of fund managers. You got like I think a dozen S&P 500 covered call ETFs. So it's very hard to go through them and figure out which one is best for you. And that's what I try to do. And what you try to do as well, right? Try to educate and see which one is best for you. How much upside are you giving up with this one? What's the fee? What's the strategy? A regular option, monthly, weekly, daily options. You know that's all the rage now in the US.
Of course.
I absolutely love the daily option one. The guys at Roundhill with the QDT, XDT, RDT, they're beating the indexes, right? Without any leverage, with a much higher fee. They're obviously doing a great job. Weekly dividend. So there's a lot to choose from. So people could get overwhelmed. But what I always try to tell people is look, remember what you're investing in. You're still investing in the S&P 500. You're still investing in the Nasdaq 100. You're just getting a little different flavor of it. So
Yeah, and nothing wrong with that. Absolutely. We had a couple of delisted funds on the Canadian side, two this year, both from Harvest. And I think this is not a bad idea just to speak about this because
sure.
it goes to the fact that, just be cautious of funds with lower AUMs, and if they kind of consistently stay kind of within that sort of single digit million amount. So we had HBFE, which is the Harvest Brand Leaders Enhanced Income ETF, and the HLFE, Harvest Canadian Equity Enhanced Income Leaders Fund. So both were kind of in that $5 to $6 million range. It's something I was kind of tracking for a while just to see, right? They're they I don't know, couldn't kind of pull it out of that, get it above maybe that
It,
10 million
it
$10
happens,
million
right?
mark.
It happens, and it's really not a big deal. I mean, it's not like you lose your money, right? It's not a company going bankrupt. It's just an ETF winding up.
Yeah.
So from speaking to the a bunch of fund managers, I think the magic number tends to be 10 million. If it's under 10 million AUM and it's not growing past 10 million like over a year or two, I don't know what the limit is. It for them it's not worth it. They actually start losing money on it, with the maintenance and the fees and the lawyer fees. It actually costs a lot of money to keep an ETF listed and alive. But under 10 million, typically after a year or two, they'll wind it up, they'll close it. But you're not going to lose your money or anything. You'll just get whatever the NAV is returned to you. It actually happened to me personally, right? I had a long time ago, I think it was a Manulife closed end fund, and they it was under 10 million, and they closed it. And I just said, you know what? I just want to see for fun what happens. And a day later it closes. I just got the money in my account, right? It's no big deal. So
Yeah.
yeah, it could happen, I guess, during that time. I think not many people understand, or maybe are too scared with leveraged funds. That one was the brand one. So they're unleveraged brand ETF, very popular. But I guess people went more for the all-in-one instead of just picking the leverage brand one. I'm sure the leverage brand one, if it still existed today, would have really phenomenal performance, but it happens.
Yeah, for sure. And I think on that end of things, right, it's if you're going to be picking funds, like you said, it's not that you lose your money, but maybe you
No,
just
no.
don't want to be in a position where, the fund is sunsetting and you're going to be forced to sell it maybe when you don't want to. So maybe that's more or less the cautionary tale is like if you're going to get in a fund, just be aware if it is a smaller fund, like you,
Yeah.
maybe you might be forced to sell it off at some point, or they'll just, it'll close down. It gets sold off
Yeah,
for you.
you'll never be forced to sell it. I would say don't feel forced to sell it. If it, they'll announce it, they'll make an announcement and typically closes like a couple of weeks after or maybe a month after. You could just leave it. What happens is if everyone starts selling it, it might not be a good time because that'll bring the price down. You might as well just let it go and you'll get the NAV back. You'll get the NAV price,
Right.
not the stock price. So if everyone just starts selling it the next day because they're frustrated, well, that could bring down the price, and then that could bring the fund at a discount.
Yeah.
So you might as well just hold on to it till the end. That's what I would do. It's just a you know personal choice, but it could happen. It could happen.
No worries. Just from last year, one of the in Canada, one of the biggest distribution increases we saw was from EBNK and QQQY. So these are
Yeah,
two
from
funds,
Evolve.
yeah, both from Evolve. EBNKs that European banks cover call ETF. QQQY is their kind of pure technology cover call ETF. Both were maybe sitting at around. They didn't. I believe the distributions didn't jack up at the same time. They were offset a bit, but those were they went, I think, from something like 10% all the way up to 15. So I suppose they're just writing deeper calls on those funds now. So I wonder if we'll see more from them
I
in
I
that.
don't for Evolve. I don't think it's like they write more or they write less. They actually have a limit, like it's 33% on EBNK, I believe, and maybe 50% on QQQY. It's just because the NAV has gone up so much that they're bringing in more call premium, so they're able to increase it. So I know for QQQY, obviously has done really well.
Mhm.
Technology stocks are typically very volatile. They're more volatile. Plus, they have a pretty from what I hear, and I talked to the CEO about this recently. The video is actually going to come out very soon. They have a pretty all-star covered call writer, Steve Pate. So, and what I like about them is you could actually see all the call options at all the strike prices that they write on their website on the portfolio. So for QQQY, I mean, it doesn't surprise me at all. Right now, I think they're at 13% yield. They could definitely make a lot more yield than that. I believe like you can make a lot of call premiums on technology stocks, like a lot, right? And they're writing just like Hamilton, right on the individual stocks as well.
Mhm.
The one that I have no idea about is the EBNK, European banks. I know they've done really well. So obviously the NAV exploded, right? The assets of the funds, which means they're just, even if you're writing at the same call, same level, you're bringing in more premium. So they were able to increase that as well. So, yeah, I mean, Evolve has never decreased their distributions on any of their covered call funds, only increased them. So they're pretty good when it comes to that. Yeah, they typically have a little bit higher yields than the competition, and lower fees than the competition. So yeah, they're pretty interesting. Those two, yeah, went up significantly.
They are, and I mean, we've seen a lot of technology cover call ETFs, rise over the last year. Well, it was just that
Yeah,
basically the 50% jump was hands down by far the biggest jump that we've seen from any of the other technology funds. But I mean, absolutely, they'll keep raising it as more people pile money into the net asset value of these funds, and also doesn't hurt that technology has done so well. throughout 2024 as well.
Yep.
Yeah.
Yeah.
So was there with 24 now almost in the rear view mirror, was there anything that maybe you learned from this year that you've started implementing in your own strategy, or just maybe something that maybe you've heard tons of times and it's just maybe it just hit in a different way and you're like, no, I'm maybe I wouldn't say course correcting, but just I'm slightly changing my strategy a little bit.
Yeah, I mean, I think I've streamlined a lot my portfolio in 2024. So I have like I consider myself that I have two entities, my retirement accounts and my main portfolio. So the retirement accounts all have three of them. I got my RSP, my wife's RSP, and my little Lira. They all have one holding now. So like I said earlier, I think one of the best ways ever to invest is indexes, and the best stock market, the best stocks in the world are always the American stock market, the American stocks. Not only that, you got to remember if you're a covered call investor, the US stocks, the US stock market has the deepest and the best options, most liquid options. So though not only are you getting the best stocks, you're getting the stocks with the best options market. It's very important if you're investing in covered call ETFs, whereas in Canada it's a bit more smaller, it's a bit more lackluster. On
Mhm.
top of that, no, the Canadian market always underperforms the US. Everyone underperforms the US. So I think I've switched, or I'm gradually switching most of everything to US stocks, US indexes, S&P and the Nasdaq being my two favorite ones.
Mhm.
Russell 2000 is good too. I just rather stick with the big boys, but hey, maybe if a leveraged if RSCL comes out from Global X, maybe I'll invest in that one. But I've been streamlining more into indexes and US as well. More towards ETFs instead of split funds. So split funds, I feel you need a little bit more babysitting them. They're a little bit more complicated. I feel they're more for advanced investors, and I'm very, very busy. I don't really have time to babysit, so I want the least amount of work when it comes to my portfolio. So I've gradually moved away from them and went into a similar sector, covered call ETF. So almost everything now, there's a covered call ETF for almost everything now, every sector. So split funds are still good. They actually completely annihilated everything and everyone in 2024. Some of them have 1 year returns of like 70,
Oh.
75%. It's just absolutely insane. But you really have to understand them and babysit them a little bit more. So that's what I say. That's what I would say that I've done mostly in 2024. As you know, I unveil my portfolio every month, so
Mhm.
people could follow my journey every single month. I think I'm on episode 44 or something like that. So it's a streamlining journey for sure, but it's been great. Obviously, stock markets have done really, really well in 2024. The crash and the recession that never came, that's another thing I've learned. I learned this lesson a long time ago. Stock market crashes, recession, all that negative predictions, 100% a waste of time. Everyone who waited, who were scared to invest, who had cash sitting on the sidelines, lost out big time. And my opinion is that attitude, that way of thinking, you're always gonna lose out big time. So that's obviously, I wouldn't say a lesson learned, but something people should learn. I hope they learn in 2024. Of course, now I'm sure the recession and the stock market crash predictions are coming, I'm sure, right? So that's all nonsense. I don't listen to that. Who cares about that? So I just invest as much as I can every single month. That's my motto. What about you?
Oh, well, I read this in the comments. I can't remember if it was one of my videos or your videos, but someone
Mm-hmm.
said it just on this particular topic,
Yeah,
today's highs are tomorrow's lows. So, right,
exactly.
it's just put your money to work and let it work. I would say for me, funny how my own like I put a video out on this idea if you're an income investor, what kind of income investor? It was sort of a bit of a going down a little bit of the rabbit hole. Are you more income yield? Do you focus more on the yield? Do you focus more on the growth? And really, it's just how are you getting that return? And I would say, funny enough, after that video, I started thinking, I looked at my own portfolio objectively, and I was thinking, I really tell myself a lot that I'm sort of this balance. I'm looking for maximum yield, maximum, price return. What is that balance? And I started realizing that, it's not going to be a perfect world, and maybe in some cases I do actually want more yield in a particular fund for whatever use case. So, I swapped out HTAE in my TFSA, as that is much more, unit price driven, for QQQY by Evolve, which you get more of the distribution through the yield. And in my TFSA, I would rather have the higher distribution, and I get basically a similarly built fund. Now, I couldn't just let go HTAE totally, so I ended up setting up a personal RSP, and that's my one fund. It's my ride or die fund in my RSP. I don't need anything else. Just let that thing ride out until the end of my days. So,
Yeah.
obviously, as long as that fund exists, and also to just um, um, I had more sector specific funds in my portfolio earlier this year. I knew I wanted to be much more into the all-in-one. So halfway through the year, I thought I'd maybe wait till next year, but I just sold off all the sector funds and bulked up all the all-in-ones that were much more American focused. I want to say in my TFSA currently, I think 70% is geared toward the American market, maybe 20% Canadian, 8% developed, 2% emerging, something like that. So
Yeah.
it's not absolutely all in the American market. It's basically mostly all in on the American market. Right? Like the American market makes up 50% of all global stock markets. So that's where you got to be if you want the growth, and especially with
Yeah.
cover calls, that's where that secret mix is gonna lie if you're looking for that extra rocket fuel in your portfolio.
Yeah, so even if you put cover call, whatever you put cover calls on, the number one driver of your return is still the underlying,
Mhm.
right? So not only does the American stocks have the best performance, you got the best options market as well. So to me, it's a no-brainer. When it comes to the tech ones, the tech covered call ETF, so there's a lot of choices in Canada now. You have HTA, which is great. It's Harvest's leveraged HTA, right? So it's one of the only one. I think it's the only one that has leverage right now. So
Uh,
obviously very popular, done really well.
QQCL, but I mean that's like index, I guess. Index.
QQCL is Nasdaq 100. It's
Yeah.
not. It's 55% tech. So when it's tech only, it would be the Harvest one, HTA, HTAE. Obviously, HTA done really well because it's leveraged.
Mhm.
They both increased their distribution recently, and probably even another time during the year.
Mhm.
You have QMAX, from Hamilton. You have QQQY from Evolve. That one's interesting. I like the construction of it because it's index based. It's basically the Nasdaq 100, but only the tech stocks. So
Gotcha.
it's market cap weighted, which is what's different about it. Also, the fee is very low at 50 basis points. I mean, can you imagine a leverage QQQY? I actually asked Raj about it. Where is the leverage? Where's the 25% leverage QQQY? You have the bank one, you have Utes. Where is the? I'm pretty sure. I hope they come out with it. Uh, that would be interesting because that the yield would be over 15% probably with that one, right? So
Probably. Yeah.
yeah, there's a lot of competition now with the sector ones, especially technology. But yeah, they've all done pretty well. So
Yeah. No, they sure have. Um, Heading into 2025, is there anything that you are maybe expecting or not expecting, but what are some of your, let's just say, call them predictions, what are you kind of getting a bit of a gut feeling for next year, if anything, that that we might see? Or how about maybe something you want to see personally?
it's funny you should ask because one of my next videos is what I want for Christmas.
Uh,
It's literally called that,
yeah.
and I literally call out everything I want, not only in general in Canada, but also for every fund manager in Canada. So I think we'll stick with the Canadian market. I think what's really the next step and what's really missing is the first daily options covered call ETFs,
Yeah.
right? So right now you can only do them on the three major indexes in the US. So just think it's crazy that none of them have come out with this yet. I'm very confident they will be. I mean, it's just crazy if they don't. But an S&P or Nasdaq with daily options, I just say just copy what XDT and QDT does. Like that's all. Literally, just copy them. You could copy the same stock symbol if you want. Another thing I think is really cool that I would like to see is weekly distributions instead of monthly. I think that's awesome. You get to see a weekly compounding effect. I'm really having fun with my retirement accounts, going in every Saturday, updating the number of shares because I went all in, as you probably know, on QDT, which is a NASDAQ 100 one from Roundhill. And every
Mhm.
Saturday I just go in, I update the number of shares, and it's just a crazy compounding effect weekly. So I hope that we would see some weekly distributions in Canada as well, and more leveraged options as well, right? I would love for Hamilton, for example, to come out with leveraged versions of all their yield maximizer ETFs, right? Can you imagine a 25% leverage version of QMax or HMax or SMax, or UMax, right? We could have 15% yields with those. Other fund managers as well, like Evolve, the leverage QQQY. More all-in-one options would be great. Evolve doesn't have an all-in-one style ETF. That would be good as well. Or to harvest and purpose, I really want. Where is the single stock micro strategy covered call ETF?
Right.
I personally went all in on the Yield Max one to get my Bitcoin exposure. So I think that I'm pretty sure Harvest will come out with one soon, but when the MicroStrategy with covered calls and 25% leverage comes out, can you imagine that yield? That crazy return if Bitcoin just keeps going up and up and up,
Yeah.
right? So there's a lot more stuff to do, I feel. And I'm pretty confident that the fund managers in Canada will get those. Hopefully my video has something to do with it, what
Yeah,
I
that's
want for
right.
Christmas. What about you? What do you desire the most?
Well, I'll tell you what. I'll give you an outlandish prediction first, and then I'll get into the more, I would say, the more likely to happen. But how about this? How about this? I cover calls on daily leverage ETFs that utilize zero DTE and then they reinvest in on themselves. So with daily leverage ETFs, these are your,
They're coming. They're coming in the US. So Granite Shares has
really.
filed for I think 10 or 15
Yeah.
covered call ETFs on the daily leveraged ETFs because
Okay.
they're getting so popular.
Yeah.
You know, there, Direction has a lot of them.
Okay.
Granite Shares has a lot of them. Defiance has the MicroStrategy one. So Granite Shares has listed covered call ETFs on those ETFs on the daily leveraged ETFs.
Interesting. Dang.
There's no daily options on those. Daily options are only on the indexes right now.
That's
They're
right.
only on the S&P, but hopefully the SEC. I think it's been like over 6 months they filed it. I think the SEC is having you know, they're probably analyzing and it's like, okay, is this too crazy? But honestly, it isn't because if you're just doing a covered call on something that's crazy, you're making it by default a little bit less crazy.
That's
So I
right.
don't see why they wouldn't approve it, but your wish is gonna come true, my friend. Granite Shares, check it out. They're
You
coming
know, and
with
I kid
those.
you not, I didn't even read anything about that. That was just sort of something that came to mind thinking, that they got to do something like this. I mean, it's not something I'd personally invest in, but it would be a fun story to cover and just see how people play them.
Can you
And
imagine the MicroStrategy one?
oh man.
Can you imagine? So the yield max has no leverage and it's just on MicroStrategy and the yield is over
Yeah.
100%. So if you're doing it on the 2x one,
Yeah.
It's just insane. It's just mind-boggling to think about. So we'll see if that happens. I think it's pretty. I don't know if I would invest in those. Maybe just for fun a little bit. I mean, it's too crazy, but we'll have to see if they actually get launched or not.
Yeah.
But yeah,
I would like to see just more leverage, covered call ETFs on the
same,
American
same.
side, and I think that is coming. I don't think that's a huge reach. I think that'll come in time, and so
I know for a fact they're working on it. That's all I could say. I
yeah.
know that yeah, they're definitely trying. That's what I want for Christmas on the US side. So when I talked about what I want on the US side, it's where are the leverage options? Can we have a leveraged SPY-I or QQQI or QDTE, XDTE? So I know they're working on it. It's harder, a bit harder to get approved there, I believe.
I guess so. But I mean, just on the topic of leverage with those kinds of funds, I mean, where do you think the max would be if someone starts 25% leverage? Someone's probably going to do
Yeah.
50, someone's going to do 175%. Like, I wonder where, I don't know. I just figure on the American side, everybody's about one-upping one another in the harshest of ways. So, right, like where does that end with just natural leverage, not creating multitudes of leverage out of derivatives and complexity that we see from the daily leverage stuff, but just natural leverage on these funds.
As from the information I got, doing natural leverage is very hard there to get approved. I don't know why.
Hmm.
In Canada, it's not. It's everywhere, right? That's Evolve and Hamilton and Harvest. It's all natural leverage. It's just regular leverage, which is great because if when interest rates are going down, that really helps them. But the non-natural leverage is great too because it's I think a more cost efficient, easier to get, with swaps and different things like that on the US side. So, but in terms of how much, I have no idea. It really depends on the fund manager's opinion on that. I think 25% is the bare bone minimum, but I'm hoping, anywhere from 25 to 33 to 50. I personally would feel comfortable with that, but who knows? There could be more. I have no idea. But obviously, the more the leverage, the more volatile the fund could be. So you better make sure you know what you're doing and you're willing to take the volatility in your account. But Direction has like a triple S&P 500, a triple or double Nasdaq 100. I think there's even a 400% S&P 500 as well. So obviously that one's doing really, really well.
Wow.
But when the market goes down 10, 20, 30%, you could be in big trouble, right? So you gotta make sure you're taking the heat. So I think for income investors, it's a bit different, right? So when you're putting 2x on MicroStrategy or whatever versus a covered call on MicroStrategy, it's a bit different. I think they realize, okay, income investors maybe want a little bit more, want a little bit of a boost, but they want a bit of stability because the crowd is more conservative, right? They're looking for that consistent income. So we'll have to see, man. We'll have to see. In terms of predictions, I don't like making them, but I could predict that. My prediction is that the US market continues to kick ass over time and beat everybody.
Mm.
And I also predict that eventually there will be a market crash or recession.
That's right.
Those are my two general predictions. When, I don't know, but who cares, right? Just keep investing and actually looking forward to it so I could buy more cheap shares instead of these expensive shares right now. So
That's right. All right. I got one more prediction. Um,
shoot.
my last prediction is maybe more American fund managers releasing,
Hmm.
you know, their versions of their American funds up here in Canada. We've already seen that with JEPI and JEPQ. So it makes me wonder, who else is coming up here,
Yeah, why not? Or partner with a Canadian firm to
right?
do it. Or yeah, for sure. JP Morgan did it, right? They launched JEPI, JEPQ, very popular. It's actually the first ETFs JP Morgan launched in Canada, which
That
is very interesting.
yeah, that is. So maybe testing the waters a little bit just to see what else maybe they can do up here. But
Yeah, yeah. The more choice, the better. Some people might feel more overwhelmed, but hey, it's more content and more work for us, my friend. I mean, I I learned a while ago that the content for my channel, I'm sure for yours too, is it's basically unlimited. It's infinite, right? It's we're never gonna run out because there's just gonna be more and more stuff, and it's actually getting pretty overwhelming. But I tell people just remember what you're investing in. It's still the S&P. It's still this portfolio of stocks, right? They're just putting a covered call on it. So
Yeah, that's right. Don't be too worried about new releases. And you're right. I mean,
yeah.
it's like if it's a new release, it's going to be there in time. I mean, even the new funds become old eventually, so or lose the luster. Yeah,
Yeah, go
that's
with the fund manager that you like, right? If you get a good vibe by the guys at Hamilton, you can go with their funds, a global. This is why I try to get them all on the channel to see just how they think about things, what's their attitude towards things, what's their cover call strategy, and you could go from there. Obviously, you have to understand what the heck they're talking about, right? But yeah, I mean, you got to learn. There's a learning curve with covered call ETFs. So, and that's basically what our channels are there for to help educate on these types of products. So,
sounds good. Well, I mean, I would say that that's a wrap for this 2024 look behind, 2025 look ahead. Much to be excited about as income
yeah,
investors. And we'll be here to cover all of it, and whether it be separate or the various times we'll get together and just talk about them.
sounds good.
We'll keep
Anytime,
doing the
man.
thing. All right, Adriano,
Sounds good.
take it easy.
Take
Thank you for
care.
coming on.